Welcome to Contractor Sense. Here you discover ideas, tactics, news, and information that matters to your contracting business and you. I'm your host, Ruth King. This episode is sponsored by Financially Fit Business. Get the business tool that makes your financial statements come alive and turns data into impactful graphs that help you see the financial health of your company. Go to www.financiallyfit.business and get started today. Thank you for joining us. Here is how we will help your business and you. I had the honor and privilege of presenting financial analysis trends to Scott Bunce's Vistage group. Here is the interview that we did.
Hello, everybody. It's Scott Bunce, and I'm here today with Ruth King. Ruth, thank you for joining me.
Hi, Scott. Thank you for having me. I appreciate it.
You're known as a profit and wealth guru, so we'll start there. What makes you a profit and wealth guru?
I know the ins and outs, ups and downs of profit and loss statements, balance sheets, and what the trends of those statements mean, not just the actual numbers, but actually putting the numbers into graphs that actually show business owners the trends and the health of the financial health of their business. You know, obviously we want the trends going the right way, and a lot of times you can't see it in just the numbers. And so I've been doing that since 1987, and I've just, I know it inside out, backwards and forwards, and upside down. And I taught AI everything I know about financials.
AI owes you, obviously.
Yes, obviously.
Well, Ruth, you were at my Vistage group. You gave a very inspiring session to the group. I know that there were some people in the room that had a lot of financial experience and some not so much, but you were able to touch on it with everybody. And one of the things that you did at the end was you shared your book, The Courage to Be Profitable. And so just so you know, I have it. I've been going through it and brushing up not only on what you said, but some of the things you didn't say.
Yeah.
But thank you for sharing your expertise with my group, as well as sharing the book.
Oh, my pleasure. I mean, it was actually a lot of fun to do because they were engaged, and it's so much fun to have an engaged group who ask really, really good questions. And, if they didn't understand something, which I try very hard to explain it in English rather than accountingese, and they got it once I explained what everything was. And I think you saw that with the group also.
I did. So one of the topics to start out was, do you have a hobby or do you have a business? Mm-hmm. So maybe you'll take a second and tell us the difference.
Well, a hobby is you work your butt off and you don't care whether you make a profit or not. You only look at your checking account to run your business. If you have money in the checking account, you're doing well. If you don't have money in the checking account, you have sleepless nights. But money in the checking account is not profitability. And it's a hobby. You really and truly don't care whether you make a profit or not. Whereas a true business, number one, cares about profits, cares about taking care of their customers. Not that the hobby doesn't care about taking care of their customers. The difference is that if you're running a business, you take care of your customers profitably. And over the years, you're going to find some customers that you very pleasantly fire because they're not producing profits for you, and they're a drain on the business. Now, that doesn't happen very often, but I call it firing with ruthless compassion. Obviously, my name is Ruth, but if you take at the end of the year and you go, okay, let's look at our list of clients or our customers or our customer base, and let's see the profitability of each customer. And if you have a group of customers who the company is actually not making a profit with, you basically invite them and find somebody else who can take care of them and go fire them with ruthless compassion. You go talk to them and say, listen, we're not going to be servicing you next year. Here's some places that you can go to find comparable products. And what we find is that after a couple of years, some of those fired customers actually want to come back and beg, say, fine, you can come back. Here are the rules. You can't complain about your bills all the time. You can't be late on payments. You can't treat our people as non-human beings and be rude and things along those lines. Or sometimes it's a safety issue. And there you never go back unless those have been fixed.
Yeah, absolutely. So let's talk about profit, net profit, and the fact that profits are not cash.
Mhm. Well, profit is basically revenues minus expenses. Not basically, it is revenues minus expenses. And if you have a profitable month, it's a positive number at the bottom of the, revenues were higher than expenses. If you had a loss, your expenses were higher than revenues. It does not tell you how much cash you have in the bank unless you are a totally COD business. And a lot of restaurants are, because you can't get out of a restaurant without paying. And a lot of them pay for their food and everything else like that when the truck pulls up, things like that. So they're about the only exception to this rule. But the rest of us, we have payables, we have receivables, some of us. If you're in a retail store, you still probably are pretty much COD from the receivable, from the revenue side, but you still have to pay your bills, and those are in 30 days. And if you're only looking at what's in your checking account, you have no idea how much you still have to pay. And profit is just revenue minus expense.
Yep.
And it doesn't tell you how much cash is in your checking account because that's a balance sheet item. And I know we're getting into the weeds here, and we talked a little bit during the Vistage program about that. And a lot of eyes kind of went, oh, it was kind of fun to watch that and realizing that, it really and truly is, you have to be profits and turn those profits into cash to be able to pay your bills. So the sequence is profitable sales, i.e. make your profits, turn those profits into cash, and those cash can get used to pay your bills, and whatever's left is yours.
Right. One of the things where I saw so many of the members taking notes was on the trailing 12-month graphs that you were showing. Can you take some time and kind of explain that? Because it's funny, because I think people tend to take a snapshot of time and that's where they are, but it's the trend in the trailing 12 months that really paints a detailed picture.
Yes, absolutely. And Scott, I don't know whether you realize it, but Vistage taught me trailing 12 months many, many, many years ago when I was a Vistage member in another group. And I obviously expanded upon it for what I learned there. But basically what it does, trailing 12 months takes a year's worth of data a month at a time. So for example, if we're looking at the data point for October of 25, it is September of 24 through October of 25 revenue, add them up, divide by 12, and that's your point. And we can do it for revenue, we can do it for gross profit, we can do it for average customer ticket if we wanted to. I mean, trailing 12 could be used any way that you want to do it to look at the trends of your business. The reason that I do trailing 12s rather than trailing 6s or something along those lines is that if you're looking at a business trend, you want to make sure that we take out, some companies have 5-week payrolls, some have seasonality in them, some have different product mixes at different times of the year. I want all of that averaged out so we can see really what's going on with the business. They might have a really phenomenal summer or a really terrible summer, but that, where were we with the trends of the business? Maybe every summer is terrible, but this summer was less terrible than last summer, something along those lines. And when you're actually looking at the trailing 12s and looking at the actual trends, you can see overall where the business is going, not just with one particular month being good or bad from a profit perspective.
Right. When I was focused in on trailing 12 months, it was getting businesses ready for sale and trailing 12 of EBITDA.
Yeah.
But you point out that there are so many different trailing 12s that could be useful. What other trailing 12s do you recommend that people look at and focus in on?
Well, it depends upon how they generate revenue, because I look at it from net profit per unit of revenue, and we also covered that during my talk that at your group meeting. But I look at it, let's assume that our KPI is the number of calls that come in the door. All right. And I'm just using that. Well, where are we on a trailing 12 with the number of calls that are coming in the door every month? Are we improving? Are we staying the same? Are we declining? Now, we don't want to be declining. That's not where we want to go. But, what can we do to have more productive and profitable calls coming in the door? You can do it with recurring revenue. Any number, like for example, if you go into a retail store now, how many people, get on their buy 12, get one free program, or, something like that. From a restaurant perspective, it might be how many members are now in the club. And you can do all of that on a trailing 12, and you want your overall trends to be in the upward positive way rather than worrying about, oh my gosh, this month we just didn't do really well. One of my favorite trailing 12s is actually productivity. And that is for every dollar that comes in the door, how much you're spending on payroll and payroll taxes. And this is a counterintuitive graph because going up means bad. Going down means good. Because if the productivity was 30% last month, and that means 30 cents of every dollar went to pay payroll and payroll taxes, and it's 60% this month, the graph's going up. Now that's 60 cents out of every dollar. We want that graph staying somewhat consistent or going in a negative downward direction, which is counterintuitive to all the other graphs for the most part.
Sure. You mentioned something a minute ago that resonated with me, and that was reoccurring revenue.
Mm-hmm.
And I just recently came out of a business where we had a membership program that was producing reoccurring revenue that could be tracked for the last several years. And again, getting a company ready for sale and the measurement of what a buyer is looking for and their comfortability of having that reoccurring revenue is so important.
Mm-hmm. Yeah, because that is customers who are, for all intents and purposes, loyal to you, tied to you, will use you, not only through the membership program or whatever the revenue maintenance program, maybe if you're a heating and air or plumbing contractor or something along those lines, or pest control or whatever. But if something goes wrong or they need other services, they're not going anywhere. And if you're going to be selling a business, the buyer, at least I'm sure you've seen this, is very comfortable knowing that there is a group of customers or group of clients that they can count on that revenue every single month and they can grow it.
Absolutely. All right. Well, let's change topics now and talk about ratios, because I know you've got some key ratios that make or break a company. So can you focus on the top few ratios and what people should be looking at?
Right. My favorite ratio is actually the working capital ratio.
Okay.
And that is current assets minus current liabilities. Current assets being things that are cash or turned into cash within a year, and current liabilities are things that have to be paid within a year. You subtract the two. If that number is going down, then your business is getting less and less and less healthy. That's one of the graphs we want to go in the positive direction. And it's really interesting because if a business doesn't have profitability and that profitability trend is going down, you're going to watch the working capital go down and down and down and down. And literally, I had a conversation with one of my clients yesterday, and they sucked up their working capital. I don't know any other way to describe it, but they basically used it all up to fund the business for the past couple of years. And you can actually see it go down. It is, if you're going to track one graph, that's the graph to track. All right. So that's why I say it's my favorite graph. My next favorite graph is the one that is receivable days, which is from the time you send out an invoice to the time you get paid. How many days is it? And again, you really don't want that one going up. It's one of the ones that is a little bit counterintuitive, except in certain reasons. If our business is growing very rapidly and it's growing on a receivables basis, then you're going to see that graph go up and up, not because of non-collections. But if your business is fairly stable, then that receivable days going up means you better start paying attention to collections. So those are probably the two that I like the most. And obviously you have current ratio, which bankers love, which is current assets divided by current liabilities. And most of their lines of credit and every loan covenant includes, I think, just about all of them. The current ratio has to be greater than 1, because if it's not, your working capital is negative too, as a general rule. Not a good idea.
I think of all the turmoil going on in and the world today touching finance, whether it's tariffs, whether it is changes in tax laws and the so-called big beautiful bill and some of the opportunities there. What do you think are some of the current things that people need to really be focusing in on right now to make sure that they're maximizing their business?
Well, this is my belief that you should pay the least amount of legitimate taxes.
Mm-hmm.
And I work on the financial side, so I'm not the tax person. But, if you have a really good team around you, you need a tax person, you need somebody who's a finance person, and obviously you need the internal people and your bankers and things like that, because we can keep and help keep you abreast of the things that are going on, like the big, beautiful bill and things that you can do to actually take advantage of that from a tax perspective. And what I always recommend is that, well, it's October, but you sit down with your tax advisor consultant now. It may actually be too late. September is when I really like to do it, and go through where we are for this year, what our plans are for the remainder of the year, and how do we make sure that we minimize our tax bill, legitimately, so that we can take advantage of whatever is coming through right now. And somebody who is abreast of the tax situation can probably do that and should be on your team.
Yep, I agree. So, Ruth, you see a lot of people make mistakes in finance. Give me maybe the top 2 or 3 biggest mistakes that owners or businesses make, and that really shoots themselves in the foot.
Number 1 is not knowing how to price profitably.
Mm-hmm.
And that goes all the way down to your net profit per unit of revenue. How do you actually really generate revenue? Like a car wash generates revenues by the number of cars who go through the car wash. A gym generates revenue by the number of members that they have. And each member has to be profitable. Each car has to be profitable. Heating and air, plumbing, electricals, service contractor is billable hours. If you don't have a billable hour, you don't generate revenue. So for every billable hour, or for every car that goes through the car wash, how much actually drops to the bottom line? You need to know that. If you don't know that and you don't like it, well, you don't know it, that's one thing. If you figure it out, if you don't like the number, then we have to figure out how to get you more, profitability per unit of revenue. That is bar none number 1. Number 2 is to look at your bank statements absolutely every day online. You never know when a bad guy is going to come and try and steal money out of your account. Just be careful. Those would be the 2 major things that I would do. And number 3 is obviously look at your financial statements every month. You knew I was going to say that. I mean, we do it in less than a minute if you're on QuickBooks Online. It takes less than 5 minutes. Just do it.
Just do it. I love it. All right. Well, all fascinating opportunities for people to maybe relook at how they're looking at financial information. Thank you so much for sharing all of that. Now, if somebody wants you to come and speak or do business with you or connect with you, how do they get a hold of you, Ruth?
Well, there's 2 ways. Our office number is 770-729-8000. And my email address is rking, R-K-I-N-G, at financiallyfit.business. And that's the name of the company. The website is financiallyfit.business, and they can check us out there, or they can send me an email or call.
Ruth, thank you again for the time today and all of your insights. It was fantastic, and I hope to be seeing you in the future, but this was really a pleasure. Thank you.
My pleasure. Thanks for having me, Scott. Have a great day.
You bet. All the best.
If you are interested in joining a Vistage group, a peer-to-peer group to help you grow profitably, contact Scott. His email address is scott.bunce@vistagechair.com. That's scott.bunce@vistagechair.com. Thank you for joining us. Choose one thing that you discovered and implement it in your business. These ideas, tactics, and strategies help you make more money, have more free time, and give back. If you like today's program, spread the word. Please review this podcast on any device you're listening to it on. Help a fellow contractor make more money, too. For comments or questions, call me at 770-729-0258 or email Ruth King at hvacchannel.tv. Thanks for listening. Have a great and profitable day.